I'm right here watching history be made. Bitcoin is now up to $111. It's an all-time high, and it's continuing to rise. I've seen it break 3 times today. It went up to 110, and this is the highest that it's been. It's ridiculous. Last trade, 189 Bitcoin for $111 piece. That's amazing to me. I mean, just look at this graph. You see this graph? That's the last 3 hours.
Have you ever been asked by a no-coiner what Bitcoin is? Or maybe you are actually here to know what Bitcoin is yourself. So I would say that you are in the right place and time. Hello and welcome to Understanding Crypto. My name is Herve, and every other day on this channel, I try my best to bring you crypto in the easiest way possible on the internet. If that's the type of content you find interesting, be sure to like this video and subscribe to the channel with your notifications on so that you don't get to miss any other value-packed video like this one. With that said and done, let's just jump right into the video. To understand exactly what Bitcoin is, we have to travel back in time. We have to go as far back as the 20th century. You see, in the late 20th century, people were already getting comfortable with using computers for various things. But the concept of digital money was still very new. Before Bitcoin, there were some attempts to create digital currencies, but they didn't quite catch up to what Bitcoin is today. Well, apparently. We would have known about them if they did. One early attempt was something called DigiCash, created by a guy named David Chum in the 1980s. DigiCash was like digital coins that you could spend online, but it didn't become widely popular. Another interesting idea was something called B-money, suggested by a mysterious person named Wei Dai in 1998. It's interesting that it's a mysterious person actually, because Satoshi Nakamoto is also a mysterious person. Now, B-money was a virtual currency that relied on complex math and cryptography to make it secure. Fast forward to the early 2000s and you got something called Hashcash. Hashcash created by a guy named Adam Back. This wasn't exactly money, but it laid the groundwork for things like Bitcoin. Hashcash used puzzles that computers had to solve to prevent spams and abuse. It was a bit like proving that you did some work to send an email. Around the same time, a guy named Nick Szabo came up with the concept of BitGold. It was another step closer to digital money. BitGold used a decentralized system, kind of like how Bitcoin works, but it didn't actually get implemented. All these ideas and experiments were building blocks, getting us closer and closer and closer to the invention of Bitcoin. They tackled different pieces of the puzzle, making digital transactions secure, decentralized, and limited in supply. These currencies all failed for reasons like centralized control, adoption, technical complexity, legal hurdles, lack of infrastructure like exchanges, timing, and market readiness. Now, this last clause, market readiness, is pretty interesting given the time when Bitcoin was launched. It almost seems so perfectly planned that one could assume that it was the government's doing, because the launching of Bitcoin was just around the same time with the 2008 financial crisis, where we had the housing market bubble in the United States pop.
Most significant financial crisis in the post-war period.
There are fears the sell-off will continue on Wall Street.
Soaring gas prices, falling home prices, and rising unemployment.
What kind of recipe is that? Overall, that's a recipe for a recession.
2008 was a bad dream. It was a bloody year on Wall Street and a real capitulation for a system run amok.
Nearly 250,000 homeowners are in danger of losing their homes.
The bankers made irresponsible loans to homeowners, permitted them to buy property on margin. Then the housing prices collapsed, the mortgages couldn't be paid, and the banks essentially became insolvent.
The collapse of Bear Stearns was catastrophic. It was a wake-up call to Wall Street. That was a real tell in the unfolding and the house of cards coming crumbling down.
In this bubble, many people had taken out mortgages they couldn't afford, and banks bundled these risky loans into complex financial products. When the housing market collapsed, the value of these financial products plummeted, causing major financial institutions to suffer huge losses. The Lehman Brothers, a prominent investment bank at the time, filed for bankruptcy, sending shockwaves through the global financial system. The crisis triggered a severe recession at the time, resulting in job losses, foreclosures, and economic turmoil worldwide. Governments around the world had to intervene with massive bailouts to prevent any further plummet.
And we can't afford to take a risk that the economy of the United States of America, and as a consequence, the worldwide economy, could be plunged into a very, very deep hole.
The Fed loaned or guaranteed the banks some $7.7 trillion, about half the value of all the goods and services produced by the U.S. economy.
Now, this crisis exposed deep flaws in the financial system, which is something I covered in my bank crisis video, linked up there. It should be somewhere up there, but I'll leave the link in the description as well. Now, many people lost trust in the government and banks because they were supposed to ensure stability, monetary stability. The centralized control of power in the hands of banks and governments, which they clearly abused, highlighted the need for a decentralized system that wasn't controlled by a single entity. The massive bailouts and money printing by central banks after the crisis raised concerns about inflation and the devaluation of traditional currencies.
Mr. President, I strongly oppose this legislation. It takes our country in the wrong direction. It forces innocent taxpayers to bail out government policies and Wall Street mistakes. It asks the American people to take a leap of faith and trust people who have consistently misled them.
This bill does not deal with the absurdity of having the fox guarding the henhouse. Now, maybe I'm the only person in America who thinks so, but I have a hard time understanding why we are giving $700 billion to the Secretary of the Treasury, who was the former CEO of Goldman Sachs, who, along with other financial institutions, actually got us into this problem.
The crisis highlighted the need for a trustless system where one could transact directly with another person without relying on intermediaries. In October 2008, a person or group of people whom we do not know up till today, using the pseudonym Satoshi Nakamoto, released a white paper titled Bitcoin, a peer-to-peer electronic cash system. This white paper described the idea of a digital currency that would allow people to send money directly to each other without the need for banks or other intermediaries. It is important to understand that Bitcoin refers to the network itself, not the coins. The coin is BTC, which is the currency of this Bitcoin network. However, for simplicity's sake, we are going to be calling it Bitcoins. So when we talk about Bitcoins, we'll actually be talking about BTC because it's just simple. This is how we call it every day anyway. Now, Bitcoin operates on a decentralized network of computers, also known as nodes. There is no central authority like a bank or government controlling it. Instead, transactions are verified by the network itself through a process called mining. Transactions are grouped into blocks and linked together in a chronological chain called the blockchain. My video on what the hell is a blockchain in the description. Miners solve complex mathematical puzzles to validate transactions and add new blocks to the blockchain. This ensures security and prevents fraud. Now, miners actually compete to solve these puzzles, and the first one to solve it gets to add the next block to the blockchain and is rewarded with newly created bitcoins. This process secures the network and creates new coins. So that is how bitcoins are created, if you didn't know. If you ever wondered where bitcoins come from or where BTC comes from. It comes from the rewards that the network gives the miners for making new blocks. Unlike traditional currencies, they have a fixed supply, and every 4 years, the amount of Bitcoin that is given as a reward to the miners on the network is cut in half in something called the Bitcoin halving event. It is generally assumed in the crypto community that after this event, prices go higher as the supply of BTC rewarded to miners is cut in half, hence a deflationary mechanism basically. Now, there will only ever be 21 million BTCs or 21 million Bitcoins. And this scarcity is built into the system's code itself to maintain its value over time. One of these Bitcoins can be split into 100 million pieces called Satoshis. Users can spend BTC or Satoshi. They can send to each other using digital addresses. And these transactions are verified by miners and added to the blockchain, making them irreversible and secure. One thing we must understand is that every miner in the network is a node, but not every node is a miner. Let's break down the relationship. When someone is a miner, it means they are participating in the process of solving cryptographic puzzles and adding new blocks to the blockchain. In order to do this, miners must run a full node, which means they have a full copy of the entire blockchain and the software required to verify and process transactions. On the other hand, not every node is engaged in mining. Many individuals and organizations run nodes solely to maintain the network security, validate transactions, and contribute to the decentralization of the network. Some people choose to run nodes for their own reasons, such as supporting the network, enhancing privacy, and having control over their own transactions without engaging in the process of mining. On the 3rd of January 2009, Satoshi Nakamoto mined the first block known as the Genesis block. This event marked the beginning of the Bitcoin network. In the early days, Bitcoin was only known among tech enthusiasts. People started mining and trading it. The first Bitcoin transaction occurred when someone paid 10,000 Bitcoins for 2 pizzas.
Pizza?
This is Laszlo Hanyet of Jacksonville, and it was a pizza delivery order 9 years ago that began the cryptocurrency craze.
I just told people I wanted a pizza and I want to pay with Bitcoin. I didn't want a gift card. I didn't want some weird exchange. I wanted to give you Bitcoin and you give me pizza.
The 37-year-old computer programmer created this thread in an online forum and posted that he would pay someone 10,000 Bitcoins for a couple of pizzas. A user from England took him up on the offer, and these pizzas were delivered to Hanyet's home. At the time, the 10,000 Bitcoins were worth about $40.
People ask me, oh man, what an idiot, why didn't you keep that Bitcoin? And it's like, well, you know, somebody had to start it off.
The pizza was purchased at this Papa John's on Atlantic Boulevard. There's even a plaque on the wall with the date May 22nd, 2010, and a proclamation that Jacksonville is the home of the first Bitcoin purchase. Tim Mosbach is the general manager.
It's just nice to see history being made here.
Over time, and we're talking about 2013, 2014, more people started learning about Bitcoin and its value began to rise. It gained attention as a potential investment and an alternative form of money. Businesses started accepting Bitcoin as payment for goods and services.
Hey guys, it's Nick here. I'm in Mezzi Grill in Manhattan. It's on 8th Avenue and 55th Street, and I'm about to eat the salad. And you may be wondering, who cares? Well, the interesting thing about this salad is that I paid for it in Bitcoins.
Companies like Overstock and Newegg were among the first to embrace it. By 2017, Bitcoin reached new heights of popularity and media coverage, with its price surging to a price of about $19,500 per coin. Now, just so that you understand the significance of this $19,500 per coin, you have to understand that the earliest recorded market price of Bitcoin on an exchange occurred in October 2009. At that time, Bitcoin was traded for the first time on a platform called New Liberty Standards Bitcoin Market. The price was calculated on electricity consumption and computational power, resulting to the valuation of 1,309 BTCs per dollar. So a single dollar could buy 1,309 bitcoins. This attracted a lot of attention worldwide from investors and the general public alike. Of course, this was its peak, and it started to decline in something investors call the bear market. What we are in now, basically. If you're watching this from the future, what's the price now? Let me know in the comments. If you're watching this from 2025, I would like to know what the price is now, because we're doing this on what's the date of today? We're doing this on the 29th of August 2023. If you're watching this from 2030, 2050, if this video could be in 2050, but just let me know what the price is. Anyway, the crypto market, just like every other asset class, rotates in cycles, namely the bull and bear market. Cycle occurs in fours, with approximately 2 years for the bull, 2 years for the bear. It fluctuates. No one really knows exactly what it is actually. But all we need to know for now is in the crypto bear market, currency prices drop significantly. And by significantly, we're talking about 80 to 90 to even 95, 96, 98%. Then in the bull market, the same prices go to, more than, some of them anyway, they go to 1,000 to 5,000 to 10,000%. Some go into the hundred thousands of percents, depending on what coin we're talking about. In the case of Bitcoin, it increased by about 2,000% in the 2020 to 2021 bull market. Note that this increase is calculated from its bear market bottom to the bull market top. And the percentage drop is calculated from the bull market top to the bear market bottom. So that's how we get the bull and bear market price difference. Now, just in case you're wondering why the prices drop or rise so much, the answer is no one really knows what it is worth or what it is supposed to be worth. You could do that with stocks by calculating earnings and stuff, but with crypto, we are basically saying that it could be this, it could be that, and thus we invest. So we don't really know what it is worth. It is like trying to calculate the worth of the internet in the early 2000s. We don't know, and that's why the price fluctuates a lot. We have no idea, basically. And so sometimes we might feel like, hey, it should be worth less, and then we start to sell. And when you sell, price drops. This is the most basic way of understanding it. There's a lot more that goes into it, but that's the most basic sense of why the price fluctuates a lot. Bitcoin's initial purpose was to be used as a means of payment from one person to another. But over time, due to its scarcity, it has become more of a store of value. Its invention led to the creation of other projects that offer similar and in some cases enhanced use cases, like in the smart contract, privacy, payments, and even storage crypto project sector. However, it is all in the attempt to decentralize the current traditional system with various crypto sectors. And since Bitcoin has been the most battle tested, both in terms of price and network integrity, and basically seen as the store of value in the crypto space, every other coin apart from Bitcoin is called an altcoin or alternative coin. And their value is measured in Bitcoin terms. So the value of any cryptocurrency is how much Bitcoins it will take to purchase a single unit of that crypto, not how much dollars it will take. The dollar value is simply reflective of how much Bitcoin it is worth. Every other crypto that is not Bitcoin is called an alternative coin, aka alternative crypto. Bitcoin stands out as the most transparent, secure, and most decentralized network in the world. We believe in it because it is the way we will become truly financially free, by keeping our own value in a way that we can use it when we want, how we want, where we want, without any silly questions from people who are not supposed to be asking us questions. That is simply what Bitcoin is. I hope you can now explain to another person what Bitcoin is. If you have any questions, let me know in the comments. I will be very happy to answer any questions you might have. If you did like this video, kindly share it with somebody, anybody. I think anyone can understand exactly what we talked about here. Do not forget to subscribe with your notifications on, because we will be rolling out another video very soon. Until the next one, stay safe.